This is Alison Tudor, Editor of Finance Asia at SuperReturn Asia 2014. And I'm here today with Nicholas Bloy, Managing Partner at Navis Capital. Thank you for your time. Turning first to Indonesia, we've just had Jokowi win an election. What does that mean, do you think, for private equity and foreign investors? Do you think that they will be convinced by his efforts to clean up government?
Yes, I think the Jokowi win is positive for the country. It's good for private equity because it's a long-term asset class and you like to see continuity. And it does represent the further sort of democratization of Indonesia, which I think is important. He's going to be pragmatic. Whether he cleans up all the corruption remains to be seen, but it's the direction that's important. So I would say it's net a positive, hopefully not too much of a positive, because of course inflows into Indonesia can overheat the market and make things expensive. But looking through that, you know, for sort of 5 to 10 years, it's a very good thing.
Yes, we have seen more private equity set up offices directed at Indonesia. Has competition become more fierce?
Yes, and prices have become higher there. So one has to be a bit more selective and careful. Of course, there are other ways of playing the Indonesia opportunity. As you don't have to just buy, you know, an existing Indonesian company. There are many companies that are not Indonesian in, for example, Malaysia or Singapore, which can expand greenfield into Indonesia, and that's another way of getting in, obviously less expensively.
Of course. Indonesia has always suffered, say, when the Fed has raised rates and foreign capital has flown the country. We have the possibility of the Fed raising rates again. What does that mean for the country and for private equity exits?
Well, I think that issue is not just affecting Indonesia. Obviously, it affects all emerging markets, you know, including Asia, including Southeast Asia. Indonesia, because it doesn't yet have the strength of fundamentals, it will always get affected a little bit more than, let's say, Malaysia or even Thailand, for example. But the risk is if the Fed raises rates quite quickly and people start sort of worrying about risk again, there'll be capital flows out of Asia, out of emerging markets, out of Indonesia. Now, if you're a buyer and you sort of look through that period, that's quite a good thing because it means price expectations will moderate and so on. So, you know, one half of what the schizophrenic sort of private equity investor, you know, he's always buying on the one hand and he's always selling on the other. So one part of you will be quite happy about that. But I think where it becomes really problematic is for exits, and particularly for minority investors who are sort of relying on the public markets, IPOs to exit. That's going to be a real problem. Fortunately, in Navis's case, we only make controlling investments, and we sell control. We sell on 100% typically to strategics, and strategics are not affected by short-term capital flows, particularly as it relates to Asia. They're looking to the long term, and so the interest of strategics in Asia is kind of a permanent phenomenon, whereas, you know, the public markets, they open and they close. So that's really the sort of the balanced view of that particular risk, in my opinion. It's also an opportunity.
And Navis, of course, is a regional fund looking at mainly Southeast Asia, but I'm interested, given your bird's eye view of the region, where do you see the best returns emerging?
I think you don't really want to sort of highlight a particular country, because I think the best returns are expressed in a slightly different way. There is a coming together of the region under the banner of the ASEAN Economic Community, which is the creation of this, you know, single market of 650 million people or so, a $2 to $3 trillion economy. And I think the very best type of investments are going to be ones where you take a national champion in any of the major economies and you take that company cross-border and allow it to address you know, the full, you know, consumer universe or industrial universe that's out there cross-border. And to me, that's the very best theme of all for the next 10 to 20 years, frankly.
Yeah. Right. I know that many people think of Southeast Asia and they think that the deal sizes are rather relatively on the small side. But and given that, do you think that now there is too much money, private equity money, dry powder, waiting to be put to work in these smaller deals?
Do you know, that's a perennial question.
I know.
And I've been asked that question every year for 15 years. And it always seems like there's dry powder, but actually the deals get done and they get a little bit bigger. I have to say this year we've invested probably $600 million, which is the highest we've ever invested actually in a single year. And it hasn't seemed difficult. I mean, these are deal sizes in the range of sort of 50 to 150 million US dollars, and there's plenty of them around. Now, if you're a very big regional fund, and there are some now that are up, you know, KKR's at 6 billion, for example, if they're really trying to write $300, $400 million checks in Southeast Asia, those are going to be few and far between. But at the sort of middle market level, there's still plenty of activity in our opinion.
Good, good. Turning to Thailand, where I know that you're very active, how have your portfolio companies fared through the political turmoil of late?
Actually, they've fared really well, and I think this is a very important point to make about Thailand, which is, however bad the politics look from, you know, the bureau of a London newspaper or a New York-based newspaper, of course the headlines are always screaming very loudly about red shirts and yellow shirts and airports being shut down and so on. But the fact of the matter is the real economy has grown pretty well, and actually we're quite well hedged in Thailand, because we have some businesses that are domestically oriented and they get a little bit affected if the economy slows down and consumer sentiment is down. But we're not talking about highly aspirational goods. We're talking about, you know, basic consumer staples, which kind of people need every day anyway. But we also have some businesses that are totally export oriented. For example, we have a very large chicken business in Thailand which exports all over the world. And actually when the Thai baht weakens, that makes our chicken more competitive on international markets, and so we actually get a pickup. And so there's a kind of natural hedge if you have that sort of philosophy about balancing your investments between domestic and regional and global in terms of, you know, export markets. And so net-net we haven't really been affected at all by what's going on there.
Oh, good to hear, good to hear. I'm also very interested in your sharia-compliant products. I know there seems to be so much interest globally in this asset class, with Hong Kong issuing a sukuk, the UK now with its sukuk. Could you talk to me a little bit about the demand?
This rising demand for sharia-compliant private equity. We don't really take too much sharia-compliant money because it comes with some strings attached. You can't, certain industries you can't invest in, and certain capital structures are not appropriate. But the reason that we do welcome some sharia investors is that, you know, because frankly we're in a part of the world where there are either sizable Muslim minority populations or majority populations in Indonesia and Malaysia, for example. And so when an entrepreneur says to Navis, where does your money come from? Well, if all we can say is, well, it comes from teachers in California and firemen in New York, for example, that doesn't resonate quite as well as being able to say, well, it comes from the local Pilgrims Fund, you know, the local Sharia institution and so on. And it gives a different complexion to our money, and it makes us feel that much more familiar and local. And I think that's always an advantage.
Yes, I can see that, yes. Well, thank you very much for your time.
Thank you.
This is Alison Tudor at SuperReturn.